Last quarter, Facebook already warned us that there was going to be slowing growth, rising costs. Were things quite as bad as investors expected?
I think it was pretty much what they predicted, which is reassuring in a sense. I think the question is it enough? But that's a different question entirely. Clearly, they're still capable of being an extraordinarily profitable company. But I think we have to really ask, will enthusiasm for using Facebook and its other properties continue to grow in developed countries like the United States and Europe?
And Deborah, we've got a pretty mixed bag of numbers here. Revenue missed Wall Street expectations, but as David mentioned, profits were better than expected. Can you break down the numbers for us? What were some key highlights?
Yeah, for me, I think although the revenue was a miss, it wasn't a large miss. So that was, I guess, a partial good sign. I think that also we saw a return to a slight amount of growth in monthly active users in the important US and Canada market. We saw flatness in daily active users, which is a bit more concerning, but at least on the monthly basis, we saw growth there. On the other hand, there was some declines in the European monthly active users, again, probably due to GDPR fallout. So again, like you mentioned, it's a mixed bag. I think it's about as good as you might have expected for a company that's been under a lot of turmoil this year.
Right, you were just talking about the user growth. It was pretty flat for daily active user growth. For North America monthly active user growth, there was actually a slight uptick in growth. What's the significance of this? Is this reassuring to investors that things at least are not shrinking?
Well, at least on a monthly basis, they're not shrinking. And I think that is important. And also on a global basis, it's important to point out that Facebook has been able to maintain that solid 66% ratio of daily active users to monthly active users, something that they've had over the past several quarters. So again, they managed to eke that out very, quarter after quarter. If that number starts to decline, I think that's a bigger red flag. But overall, again, I think this is about as good a quarter as you could expect for a company in the position Facebook's in.
Right, and I just want to point out, as we're going live, Mark Zuckerberg has just started speaking on the call saying we have had a solid quarter, but I want to point out that costs are rising. They're up 90% from the same quarter last year. David, what does this mean? Are they spending still on the content management issues? Is this where this 90% increase is mostly coming from?
I'm sure that's the reason it's going up so much faster than it ever has before. I think the company wants to say, simply by spending and hiring, that they understand how serious the problems are and they're doing something about it. But the proof is in the pudding, as we say. And until we see Facebook not having the pernicious effect that it's having on elections and on social dialogue, which is still manifest in all kinds of ways in our country, in the United States, in Brazil, and around the world, I don't think we're going to really be confident that those measures are enough. Nonetheless, it's good they're willing to spend money on it. I fault them, though, for not being willing to talk about it bluntly. And maybe on this call, Zuckerberg will be pressed to explain how he feels and how he thinks about the extremely negative role that Facebook has played in certain aspects of modern society, which they have never directly confronted. But I'm glad to see them spending money.
And Deborah, I'm sure we'll hear more about this on the call, but as David mentioned, there are these societal concerns that are hanging over their heads despite some positive numbers. Are you seeing brand advertisers holding back at all because of the brand safety, security issues we've been talking about?
Yeah, you know what? We have not seen any holding back on major advertisers. They're continuing to spend strongly on Facebook. They're spending strongly on Instagram as well. We're forecasting Instagram will have $9 billion in ad revenue this year, amounting to about 25% of Facebook's overall ad revenue in the United States. So an important and growing part, and advertisers are still very enamored with Facebook and also with Instagram.
Right. It seems like advertisers may be enamored, but users are being enamored less and less. Let's talk a little bit about Instagram, which is proving to be more popular. David, are they starting to really pull that as a lever of growth here?
Well, certainly, if ever numbers are right, then if they're making $9 billion in ad revenue from it, that's a big, big number, considering how recently it was zero. It wasn't that many years ago. I would like to see the company be more blunt and disclose what's really happening with their other properties in some detail, which they haven't done. Clearly, they have a hedge against whatever happens with Facebook. On the other hand, in some ways, even though it's photo-oriented, the architecture of Instagram is very similar to that of Facebook. And many of the abuses that are happening on Facebook are also happening on Instagram. Instagram has more or less been kind of exempt from criticism about it, but that's starting to change. We're starting to hear more and more stories of how Instagram too is being abused for propaganda, hate speech, etc. But clearly, they're doing well with Instagram, and that is good news for the company that, otherwise might not have a lot of good news.